Ever look at a stock quote and felt like you're reading alien code? Don't worry, you're not alone. But I'm gonna make sure by the end of this video, you'll decode it like a pro. Hi investors and enthusiasts, welcome back to Market Monday Mindset with Stacy. If you've ever been confused by those charts and numbers next to a stock name, today's for you. We're breaking down how to read a basic stock quote so you can follow any company's performance with confidence. Whether you're watching Apple, Tesla, or the S&P 500, or your favorite local brand. All right, grab your phone or laptop, open any investing app or website, and let's read a real stock quote together. A stock quote is basically a snapshot of what's happening with a company's shares right now. Here's what you'll see. First thing you'll see is ticket symbol. This is the stock's short nickname. For example, AAPL is Apple Inc. Think of it like a social media handle, but for the company on the stock market. The last price or last trade is basically just the price someone has paid for one share. Right? It's the most recent deal. An example would be, imagine buying an apple at the farmer's market for like 2 rand, right? The last price for that apple will be the 2 rand that you paid. For a stock, it is the exact same principle. If you see last price $180, it means the last person who bought the stock paid $180 per share. The bid and ask price shows what buyers want to pay and what sellers want to get for the stock. Think of it like bargaining. Imagine you want to buy that apple at the farmer's market for, let's say, 2.50 rand, right? This will be considered the bid price. Whereas the seller will look at you and be like, nah, I'm gonna sell it for 3 rand 10 cents, right? This is the ask price. The bargaining will continue until, both parties reach an agreement, and it's usually the price in the middle. So for a stock in your broker platform, it's represented like this. In essence, buyers are trying to pay a little bit less because we want to keep more money, and sellers, they want to, bid a little bit more. The final trade will always happen somewhere in the middle. When it comes to the day range, it's going to be showing you the highest and lowest prices the stock has traded today from the time the markets open up until this very moment. Think of it like a thermometer for stocks. So if the day range is $50 to $55, it's telling you that the lowest price was $50 and the highest was $55. It tells you how much the stock's price has moved during the day. And if the price is near the high, it means buyers are strong today. And if you recall last week's video, we would consider this a bulling market. Going long, it's bullish. The 52-week range, basically think of the day range, but for the past year, right? It shows the highest and lowest prices in the last 52 weeks. Think of it like looking at last year's weather records for the hottest and coldest days. For an easy example, argument's sake, let's just say that Apple's 52-week range was between $40 to $70. So in the last year, Apple traded as low as $40 and as high as $70. The 52-week range exists to help you see how cheap or expensive the stock is compared to its past year. And some investors like buying closer to the low price and selling near the high. Let's move on to volume. This is one of the most simple things. that you will probably learn today. Okay, it's pretty self-explanatory. Volume is all about how many shares have been traded today. High volume means lots of activity, like a busy mall. Low volume is a quiet store with few customers. An example would be a volume of like 30 million shares traded today. Next up, market capitalization. You'll probably see it as market cap, which is basically just showing you how big the company is overall. For instance, Apple's market cap is over $2 trillion USD, guys. That's ridiculously huge. I don't think you understand. That is mad business. And when it comes to like a big market cap, it usually means the specific market in question is more stable. Now you see why people like Apple. They might be a shitty brand phone with not the best technology, but when you're that valuable, a lot of people are gonna flock to you. And because of this large market cap, Apple is viewed as a very attractive market to enter. Despite it being pricey, investors are willing to take that risk and buy into this market because of the stability it provides. And with such a big market cap, the likelihood of the stock value going up is very, very probable, which is something all shareholders look for when deciding to invest. But please, don't think just because a company has a big market cap, it won't crash. This is the financial markets. What goes up must come down because there needs to always be balance. An easy way for you to calculate a company's market cap, if it hasn't already been put there for you, this is the equation that you can follow, which is share price multiplied by number of shares. Let's wrap this up with the essential that you should be taking away from this video. Okay, ticket symbol, the stock ID or the stock nickname, last price tells you the latest trade price, bid and ask what buyers and sellers want, days and 52-week range shows today and yearly highs and lows, volume tells you how active or busy this stock is, market cap shows how big the company is. Knowing these basics helps you judge if a stock is moving fast or slow, if it's popular, and where its price sits compared to its history. These are very, very important when deciding what you want to invest in. And that's it, folks. You've cracked the code. So, your mission this week, very simple. Open up your investing app and read a stock quote by yourself. Drop a comment below. Tell me which ticket you checked and something interesting you noticed. If you found this helpful, give it a big thumbs up, leave a comment, click on that bell for the notification, and subscribe for more bite-sized investing tips. And also share this with a friend who wants to level up their money game. I'll catch you all next week, Monday, for more Market Monday mindsets. Until then, keep learning and keep growing. Bye, everyone.